Let's take a look at the S&P 500. Got some great rally action yesterday, and supply and demand events pretty much rule the markets. We can see everybody that was short from this previous 1424's trade action going forward, holding that short inventory through all this consolidation period. Finally, we'll call it let go of that inventory right into the push in the after hours session. So I've been a seller in this range extension above the 1430s level. We did get a pullback here on the jobs news, and we're getting a little bit of a push, and as you can see, the ES at this time basically is hardly holding any short inventory in this market. We have some key buying levels on the way up here, 1427's area, 1416's area, and 1407's and 1400's are all holding inventory as a byproduct of those that were buyers through this rally action yesterday and into the after hours session last night. I would not be surprised at all to see this market get sold into some. You have to realize all smart money now that's long, holding all the significant long inventory from lower pricing levels, 1390s, and all the buying that kept taking place at the 1395s. Those managers need to seriously think about now cashing out, now that the market is vacant of any significant held short inventory. So if you're a fund manager and you're playing with thousands of contracts and you know the market now is absent or vacant of significant held short inventory, that tends then to get you to start wanting to cover out of your positions into any additional rallies offered by newly initiated buyers trying to chase either news or equities buy program activity. So this is a day where we'll have to see what equities does with buy program activity out of the open, but I will not be surprised now that the market has gone to a major inventory grab where we are vacant of any significant held short inventory. It makes it harder now for the market to rally. When you don't have those holding short inventory that can be pushed into buying to cover, that changes the kind of overall supply and demand dynamics of the market. Very significant amount of long inventory supply still holding from all the buying that took place in this last run up to 1424s in the areas from about the 1397s area to 1410s. That inventory kept holding through this multi-day period, held through this period where we had very tight price range action. And then on some ECB news and European news, we did get the euro dollar now pushing 1.2600 level and even 1.2700's level, and we have been able to get equities back in the game as buyers. As a result of equities coming on strong, we have gotten this holding short inventory that was holding in the market to finally unwind and let go. And that put us into what's called a out of balance open interest situation. When we have open interest of everybody and their mother holding long positions and the open interest of nobody holding any short inventory of any significant size, we've run to what's called an extreme out of balance open interest ratio. So that's the situation. First tests of support then, where there's actually inventory holding, will be down here 1427s. You can see the market broke above previous levels. We did get a lot of selling in this area. New buyers came in as equities kept running buy programs, and we did get some additional range extension with the final short inventory unwinding. So 1427s, I'm not really looking at that level to hold support. Usually some of the last buyers that come into the game typically let go of their inventory first, and would not be surprised to see the market at some point today trade at least through the 1427s. Stronger support would be down in the 1416s. The buyers that bought in this area, will see if they defend, or here off the 1407s. Very likely we're going to get some cashing out today and a return of this range extension back into the previous range. Very, very likely. So that's where we're at today with the S&P 500, the Emini.